What's up guys, welcome back to my channel. In this video we're going to touch on why traders fail and risk management. Now this is one of the most important topics and the most overlooked topics, and risk management is what's going to make or break a trader. So in this video I'm going to cover risk management fully, and by the end of this video you should all be clear on how you should manage your risk. Now a lot of new traders focus too much on to find a holy grail strategy, or they focus too much on indicators thinking that that's going to make or break their trading. In reality that's all there to help you. The foundation of trading will always be what makes you a successful or non-successful trader. And risk management for me is one of the pillars of trading. You need to have that sorted out before you get into any trade. So make sure to pay attention and write this down. Engrave this in your brain. I can give you the best strategy in the world, but if your risk management isn't on point, it's not going to work. You can win 5 times and lose once and you're done. So I'm going to make sure to be clear and keep it basic. Okay, so let's go through the lesson. I made a small presentation to keep it as simple as possible, alright? So, the first thing you need to acknowledge is losses will happen. It's inevitable. You are in control of how much you are going to lose. Losses will happen. It's part of the game. You can be the best trader. You can go months winning. Eventually, you're going to lose. Now, the only thing you can control is how much you're going to lose. So never enter a trade without an exit. Now, I see a lot of traders which enter trades blindly and they don't have an exit. The human brain is very powerful, and that's when you end up holding, hoping, and it's just a downhill from there. The next part is base the amount of shares you buy around your stop loss, not the other way around. You don't enter a trade and then decide the stop loss. I don't understand people that do that either. You find your stop loss and you buy the amount of shares around your stop loss. I'll explain that as well. So this is how you control your losses. The screen's a bit off over here, but yeah, just bear with me, you can see what it says. Here's a new trader that's coming to the game. He's got no knowledge on risk management. He personally is going to risk 10% per trade. Alright, so this is Mike, and he's going to trade and risk 10% of his capital per trade. Here we have Dave. He's going to risk 5% per trade. He doesn't have a lot of risk management knowledge. In his own mind he's being reasonable, and he's keeping it to 5% per trade. Then we have Bill. Now Bill has his risk management on point. Okay, this is the guy you want to copy. He risks 1 to 2% per trade, and he risks max 5% per day. The better the setup, the more he risks. Alright, so 1 to 2% per trade. Alright, so as you see here, Mike, the guy with no risk management, he lost 5 trades, risking 10% per trade. 5 trades, and that's realistic. Okay, there's gonna be days where you're gonna have a 5, you're gonna lose 5 a day, or 4 a day, or 3 a day, whatever. Okay, he loses 5 trades and he risks 10%. He's got 50% of his account blown, so his new balance is $500. Right, this is pounds, this is dollars. I'm sorry, I did this when I just woke up. So yeah, let's keep it to dollars. His new balance is $500. He lost 5 trades and wiped 50% of his account. Okay. Now we have Dave. Dave was the guy that in his head was being reasonable. He lost 5 trades, risking 5%. His account has been blown 25%. His new balance is $750. So keep that in mind. He's lost 25%. He's lost 50%. Now Bill, this is the guy with good risk management. He can take a loss, close the laptop, and walk away. He loses 5 trades, risking 1 to 2% per trade. 5 trades, he's lost 5 trades and he's only blown 5% of his account. His new balance is $950. He can close the laptop and walk away. This is another thing I want to talk about. Mike, alright? It doesn't matter. You can be the mentally toughest human being. You blow 50% of your account. Revenge trading, over trading, etc., etc. It's all going to come in. Dave, as well, 25% account. Do you know how much with these two? Alright, do you know how much you have to win again just to come back break even? So just to get back to break even, he has to win 5-10% trades just to get back to break even. He has to win 5% trades to get back to break even. He has to win 1% win trades to get back to break even, and 5% is something you can make in one trade. So realistically speaking, Bill can win 1 trade and go back to break even. These people Unless they're trading penny stocks or something else, they're not going to be able to get back break even. Alright, so these two are obviously distressed. As you see in the picture, I tried to put them distressed. This means, look guys, if you lose a lot of money, your brain is going to come into play. It's going to be very hard to close the laptop and walk away. If you lose 5%, you say, look, today's not my day, I close the laptop and I walk away. Now, the question, but Michael, if I risk more, I will win more. Isn't that better? He has potential to win more. He has potential to win more. He's going to win at a steady, slow rate. Okay? So you're telling me, if I risk more, I will win more. Isn't that better? My question to you is, are you here for the long run? Do you want to learn how to become a profitable trader? My other thing to you is casinos are better for gambling. I can go now to the casino, put some money into the roulette, and I get a guarantee I have more chance of winning than just blindly taking a trade. And the next thing, the power of compound growth beats all. There's nothing better than growing your account by 2 to 5% a day, closing the laptop, and you know you're getting to your goal. Alright, you're slowly increasing your capital. If you're doing it for fun, then yeah, put all your money in game and blow it, or risk 10% per trade, whatever. It depends, up to you. I'm here to be a full-time trader, to make this my job. Treat it like a business. So this is my conclusion. Sorry about the screen. This program is just getting this part of the screen. Look, only risk 1 to 2% per trade, and your maximum drawdown should be 5%. Alright? Keep your mind healthy from revenge trading, over trading, feeling emotional. Trust me, I've seen a lot of traders when they lose the trades, they have fights with their girlfriends, they have fights with their family, they just have a horrible day overall just because they took a loss. Look, you cannot be like that, man. And if you lose 5%, you're not going to feel like that. You might feel a bit pissed off for 5-10 minutes, but you're going to move on with your day. Keep your mind healthy and live to fight another day. Only risk 1 to 2% per trade, and maximum drawdown should be 5% at most. This is what I do and what I find is successful. Alright, you can easily win one trade at 5%. If you're sticking to this risk management, you can lose 3 trades, win one, and win it all back. Now, let's go back to base the amount of shares you buy around your stop loss, not the other way around. This is what I mean by this, okay? Alright, so I usually use TradingView, but I'm going to use this just for the sake of this part right here. Let me imagine I'm taking a trade, okay? Let me imagine. Look, I see an area of resistance right here. Alright, I see an area of resistance. So I'm going to enter a sell position. Let's imagine that candle already hit there and it started rejecting. I'm going to enter a position with my stop loss at above this high at 38.17. So the first thing you need to determine, a lot of people, what they do is they just enter the trade without determining the stop loss. After they sell or buy, they place a stop loss. That's crazy, because you don't know how much, you don't know how many shares to buy, so that your stop loss, if it hits, it's your 2%. Do you know what I mean? So always determine the stop loss. My stop loss is 38.17. I'm not changing that for anything. I'm looking at the chart and I know that this is a structure or the pattern or the strategy that I use. I know that my stop loss is there. I am not changing my mind. No emotion, just looking at the chart. I know what it's going to do, whatever. Okay? So my stop loss is 38.17. Let's say this is a really good setup. You're going to risk 2% on this trade. Okay, so I need to... My stop loss is 38.17. Buying one share will make me lose 42p. Let's imagine this is a £1,000 account, alright? So £1,000, 2%, I can lose £20. That's my stop loss. I'm not changing it for anything. That is my stop loss. This is the level that I know if price reaches here, it's gonna reverse. A lot of people, what they do is they buy 200 shares with leverage, and then after they determine their stop loss. In this case, they would have been risking £84. Alright, so they would have been risking 8% on a single trade. That's a mistake a lot of new people do. They sell or they buy, and then after they determine the stop loss. Never do that. I want to lose £20. So we keep adjusting. 48 shares. If I buy 48 shares, my loss is 20. Cool. Perfect. So you buy 48 shares. Now your take profit. Let's say you're going to sell a take profit as well. Alright, another area of support is, let's say, right here. So at 36.40, I'll take my profit. Look at that. This is how you grow an account. Realistic trade. You buy the shares. You're risking 20 and you're making 40. Okay, price has a big chance of reaching there again. Alright, so as you see, price touched, bounced, price touched, bounced, price touched, bounced. That's resistance, that's support. It's that simple. You're risking 20 to make 40. If you lose, oh well, you got stopped out. You have 3% more for the day. Let's say you win, it hits your stop loss, you're up 4% on your account. 4% off 1,000 is 40. Look, 1,000 will turn to 5,000, will turn to 10,000. Stop being greedy. Learn. First, learn the market. Learn. Grow your account slowly. Don't have an 1,000 account and expect to make 100%. That's not sustainable. Yes, for example, this trade can very well, let's say I don't sell or take profit, and let's say something happens and this trade just completely tanks and tanks and tanks and tanks, and let's say MGM goes 232. Let's say I write it down. I have another strategy which I'll share, which is trading stop losses and taking partials. Alright, let's say you're in this trade and you're expecting it to hit 36.40 and you're out. Let's say bad news comes out or it breaks this support. Let's say that MGM goes to 32. Let's say it hits 32. Something completely horrible happens. Look at that reward. You're risking £20 to make £200. That's 20% on your account. Situations like this are very rare, but they can happen. And guess what? You're not all in. You have more capital to place more trades. Your only problem is how much money you're going to win. You already know how much you're going to lose. You already know that if you get stopped out, you're losing 2% of your account, £20. Let's say it's a riskier play and you only want to risk 1% of your account. What do? Adjust it. Okay, so let's say you only want to lose £10 on this trade because it's risky and you only want to lose £10. So now you're risking 1%. Instead of 48, which risks you £20, you buy 25, which risks you £10. Just keep doing this. It's that simple. It's not rocket science. Anyone can do it. Risk management is one of the pillars of trading and you need to have it. If you don't have it on lock, you're going to have winning streaks. You're going to feel like you're on top of the world. You're going to feel like you're a god. You're going to win. One loss will wipe out everything. One loss will wipe you out.